In case you haven't had enough excitement already in the last 10 days or don't anticipate enough cool things going on today with Microsoft and Meta and Tesla and the Fed all reporting, well, then Alibaba could come out with something they claim is better than DeepSeek and further rile the markets. Interestingly, it hasn't created as much fuss as one might think, but not it's not going unheard or unnoticed. Anyway, we'll see what happens as the morning progresses. Tesla looks like it's going to be satisfied to hang out in the 390s as we kind of await those results later today. Well, Newsweek had this to say. I don't normally quote Newsweek, but they had the best article. Tesla wrote in the post on X on Tuesday, Teslas now drive themselves from their birthplace as the factory from their birthplace at the factory to their designated loading dock without human intervention. One step closer to large-scale unsupervised FSD. Jeff Lutz posted on this earlier today. He's talking about this is just, it's amazing to watch. It is amazing to watch. It was all over the feed yesterday, people repeating the little short video. I'm sure you've seen it. And, this is interesting. Jeff mentions it's like the first time he's ever seen any product that delivers itself, which eventually, I think that's what we're going to be talking about. I mean, 2 years ago, we were talking about the idea that it's possible that Teslas will drive out of the bay and then they'll just drive straight over to your house. And then you'll have your car. Anyway, we'll see what happens on all of that. Newsweek goes on to say that 𝐤𝐸𝐾𝐲, all one word, on X, wrote in a post reacting to the video shared by Tesla, this is the craziest clip Tesla has ever released. I think not. Aaron Levy, CEO and co-founder of enterprise cloud company Box, wrote in a post, Tesla's driving themselves off the factory floor. When you see stuff like this, it's obvious there are just crazy cool efficiencies everywhere if you look properly. Well, of course, the efficiency they're talking about here is you've just eliminated quite a number of employees across 4 factories that used to be in the business of driving the cars from the end of the line to wherever they were going to park them. I guess eventually they'll also just pull themselves right up onto the trailers or onto the ships, etc., without human intervention as well. Investors Daily said this morning, investors will be looking for 2025 delivery guidance, and they will be looking for information on whether Tesla's long-awaited affordable vehicle will still start production in the first half of the year. They want to know whether fully autonomous self-driving remains on track for California and Texas by mid-2025, and they would like details on the timeline for the much-touted Optimus humanoid robot. I think that's a good summary, which is why I posted it. More attention will be paid to comments on the outlook, including a reiteration or not of the 20 to 30% goal in terms of delivery growth for 2025. Remember, I think that is a ridiculously low number if unsupervised turns out to be made available soon. They'll be wanting to know about AI infrastructure expansion, of course, and whether the cybercab deployment is going to happen, this year or not. Optimus milestones and potential and long over deep dive AI day. That would be nice. I'd like to have an all-in day, not just AI. Let's have AI combined with battery, combined with Optimus. Let's just do it all in one day. Wrote Adam Jonas from Morgan Stanley's high-profile auto. That's who Adam Jonas is, a high-profile auto analyst. Tesla stock is 7 weeks into a new base with a traditional $488.54 buy point. 488 buy point. The record high from December 18th. Now that was intraday. According to Market Surge charts, the stock is 23 below that entry, but poised for its first rebound following a November breakout, poised for a rebound. Spring loaded, you might say, but I don't think we're going to see 488 until mid-February, unless there's an announcement or big, huge news, which of course is always going to fix things or change things. A bounce above the 21-day exponential moving average would mark a clear rebound. Investors could also plot an early entry off a 439.74 high from January 17th. So there are some technical things for you to contemplate. I've seen several street estimates for the EPS for today. They have definitely drifted higher. Investors might be looking at 77 cents as that number to beat. It was as low as 74 cents earlier this week. So we've seen this typically happen as we get closer to the earnings day, the street numbers go up and up. Anyway, I cannot get enough has his estimate at 98 cents. He would be the high. Nobody's higher than him. James Stevenson's at 86. We've got street consensus, as I just mentioned, at 77. Tesla Larry, also 77. AJ at 76. Gary Black at 74. Tesla Fan Metal at 73. Match ASM Matt at 72, and Troy Tesla at 0.72. Somebody else, I forgot who it was, is I think as low as 65. All right, so we'll see. Those are now, everybody's got their numbers locked in for today. Elon Musk said today, medium resolution images. Wait a minute. He starts like in the middle of the story. Starlink direct-to-phone constellation will be able to do medium resolution images, music and audio podcasts with the current generation. The next generation constellation will do medium resolution. So I don't think anybody was expecting this, but it's not moving markets because it's, nobody's paying attention. This is huge. I mean, it really is huge. Anywhere on Earth, anytime, anywhere, anytime, you'll be able to get medium resolution images, music, and audio from Starlink. Okay, this is Randy Kirk. Hit like, subscribe, notify. Okay, this is going to be a big day in terms of this evening. We will have Jeff Lutz, and then we will have Brian Wang separately, not together. I'm not into this having 2, 3, 4, 5 people sitting around on Zoom, batting the ball back and forth. I prefer to get my analysts on one at a time so that we can really, the two of us can really work it out. But anyway, it looks like it'll be Jeff Lutz first, and then Brian Wang at about 7:45. That's what it's looking like right now, but man, things are, fluid going into earnings always. Pierre Ferragu says, oh wait, I forgot this one. Alibaba has another LLM out today that they say is better than DeepSeek. NVIDIA dropped, but then recovered to about where it had been before the Alibaba announcement. Pierre Ferragu had this to say yesterday about the DeepSeek. He says, my days this week are mostly about listening to 15-minute long questions from investors about DeepSeek and me responding. DeepSeek is a non-event, he says. Business as usual in the log scale world. Next question, please. Well, this is what I've been saying for a very long time. When the DeepSeek came out, I gave right away, I said, look, NVIDIA only has like a 35 PE. Why does it only have a 35 PE? Now, remember, I know I'm like I've spent a couple of hundred hours studying NVIDIA now, but still, I don't have a computer science degree. I'm not a Brian Wang. I can't look into this stuff on the level that Jeff Lutz can, but I just look at the big picture. And what I know is that all of the analysts of NVIDIA, every single one of them, and some of them more than others, feel like these margins are not going to hold up, and they're not going to be able to continue to grow at the kind of rates that they're growing because there's going to be disruption and there's going to be things that are going to happen that we cannot predict. Therefore, we can't give them that kind of PE. They just can't. This is a completely different situation than, say, Optimus Robot, which the TAM is so massive that it doesn't matter how many players even get into the game. If Tesla has a compelling product at a compelling price, they'll sell all they can make. So this is a very, very different situation. And so the PE has always been low. So basically, what I'm saying is something like DeepSeek, something like Alibaba today is baked into the price already and that's what I've been saying. I've been saying this for a long time. Anyway, so that's all I got to say. Market Watch says maybe the most critical thing for markets right now, after the Fed's meeting concludes Wednesday, will be whether the H word comes up. You know what H is, hike. That's according to Rick Ryder, BlackRock's chief investment officer of global fixed income and head of the BlackRock Global Allocation Investment Team. Any hint of a potential for hiking rates this year from Fed Chair Jerome Powell could trigger a rise in bond rates, said Ryder, who expects Powell is more likely to communicate that the Fed needs more time to watch the economic data before offering cuts they'll just be neutral. So he's expecting a very neutral call. I'm expecting a very neutral call. However, I do believe that he respects the incoming Treasury Secretary, and he might have been on the phone with him. And that might be impacting what gets said today. I think, according to Ryder, I think the Fed would like to get the rate down, but if the economic data doesn't evolve in a softer manner, I just don't see how the Fed is going to be able to cut this year. But we've got oil prices dropping very fast right now. Housing prices seeming to moderate. We'll talk about that in a minute. He cited inflation running above the Fed's 2% target, the expanding economy, a solid U.S. labor market. Before cutting rates again, the central bank may need to see a couple of months of some tangibly softer employment data, potentially in areas such as wage growth. All right, folks, I'm just going to say it again. M1 and M2 is how you should be managing inflation. That's according to Milton Friedman, not me. Okay, you're not supposed to be managing the economy by jiggling up or down on labor or jiggling up or down on interest rates. It's the way to do it is through M1 and M2. And I think that's what the Treasury Secretary is going to do. And I think that's what he's saying to the Fed chairman and saying, look, I'm going to manage M1 and M2, and I'm going to drop the spending by the federal government. I'm going to make sure I'm going to oversee what you can clearly see is the intent of the Trump administration and the DOGE Commission and Elon Musk to drop the spending by the federal government, and that is going to drop interest rate, and that's going to drop inflation and interest rates. The U.S. employment report for December showed job growth was hotter than Wall Street expected, while average hourly earnings was 3.9% year over year, up. The next reading on U.S. inflation is measured by personal consumption, is due on Friday, but everybody assumes that the Fed already knows what's going to happen on Friday. I don't know if they do or not, but they should have almost all the components from the CPI and the PPI. The previous PCE report showed core inflation, which excludes energy and food, running at 2.8 over the last 12 months. And that's what they base it on as the core. Meanwhile, companies' pricing power has appeared solid, according to Ryder. That's interesting. There's an interesting data point. I look at a lot of corporate earnings reports that said you see pricing power everywhere. The U.S. stock market is up so far this year, with the S&P 500 rise Tuesday, leaving it only 0.8% below the record high, not 2 days ago, 4 days ago, whatever, on the January 23rd. Check this out. All right. Netflix is raising prices. Yeah, you knew that. Okay, he goes on to say, in Powell's press conference on Wednesday, we will listen for hints about whether the further decline in inflation we expect in coming months could open the door to rate cuts. How strongly the leadership feels that the current level of funds rate is still meaningfully restrictive. These are the words you'll want to listen to, and not an appropriate stopping point. And how the FOMC intends to navigate uncertainty about potential tariff increases now and their impact on prices, not inflation. You notice I said prices later. Okay, so you got to make that distinction between prices and inflation. Okay, I never knew this following. I never knew what this was new news for me today. Barron says a correction is certainly possible, but it doesn't happen all at once, which is why traders sometimes cite the rule of three. They prefer to wait 3 days before looking for opportunities in a sell-off. Yes, that's what I've been doing for years. When you've got a major piece of news and all of a sudden the market goes down or a stock goes down, wait 3 days. It won't kill you. You'll be fine. You might miss some crazy bottom, but you probably would have anyway, because none of us are smart enough to catch those bottoms. Anyway, the rule of three. This is good. That's why I brought it to you. Academics and traders have looked at the importance of stock streaks many times, but there isn't much science backing the rule. It's only an idiom that it might be a good idea to wait a proverbial minute before buying up beaten down stocks. Some trading opportunities will emerge from the current downdraft. They always do. Down another few percent for key indices and stocks. And in a couple of days, looks like a good place and time to start hunting. This is according to Newsweek this morning. 1 in 3. Okay, if you watched last night, and you should have, and I'll put the card up in a minute, Nicholas Gibbs and I got into quite a discussion about real estate. Now, most of you probably own a home, and many of you probably own 2 or 3. Maybe some of you have even several. So you're concerned and interested about what's going to be happening with home prices. Well, of course, your home values have gone up so much over the last 10, 15 years that you're probably not concerned if they drop 10% or 15%, that'd be fine. So, but you'd be way more concerned if they go down a lot. You heard me say to Nicholas Gibbs, I don't think they're going to be coming down anytime soon. And I think mortgage rates will be coming down. I very definitely think that's going to happen. And I think that there's still super limited inventory. And that therefore, when we get into season in March, you'll see too much money chasing too few units. All right. But this is what Newsweek had to say. 1 in 3 homes listed for sale on the U.S. market has taken a price cut from the original listing, according to founder and president of real estate analytics firm Altos Research, Mike Simonson. And Altos is highly respected. Says, we're noticing in the data some signals saying that home prices nationally could turn negative this spring, showing year-over-year home price declines for the first time since early 2023. But you notice the early 2023 thing didn't stick. The U.S. is facing an ongoing housing affordability crisis spurred by historic shortages of homes. See, that's what I said. Rising prices, high mortgage rates, and years of pent-up demand. Years of pent-up demand. A widespread lack of inventories kept prices up, even as Federal Reserve's aggressive rate hike campaign sent mortgage rates skyrocketing. As mortgage rates are still hovering around 7, yes, they're now right around 7, dropping down they'll drop into the 6s this week. As mortgage rates are still hovering around 7%, despite recent cuts by the Fed, aspiring home buyers remain cautious before making a purchase. Simonson's data shows that sellers are being forced to meet them where they are, especially as inventory is expected to increase in many parts of the country. Yes, in Texas and Florida, as he mentioned, yeah, you've got places where there's plenty of inventory, but there's no new inventory in coastal regions. There's no new inventory. And so, anyway, there's one bright spot in the data. According to Simonson, 2025 is the 3rd year in a row of flattish home price gains. Flattish, it's been like 6% a year. Over the past few years, and hopefully over the next few, incomes are climbing faster than home prices. When income climbs faster than price, we improve affordability, obviously, except when you got mortgage thrown in there. Who is this guy? It's a combination. You have to take the combination of what's happening with the prices and combine that with the mortgage in order to get the monthly payment, which is how people decide whether they can afford something or not. Okay, there you go. That's what we've got so far today. Let's see where the markets are going with all this information. By the way, I had one more story here and somehow it disappeared. And that is that the trade deficit is at a record high. I don't know the details. I'll just give you that much because somehow I blew it there. All right, so we got Tesla down this morning, $5.84, sitting at $392.25. I'm pretty sure it's going to stay above 390 all day. Might even go back to 395, 390. I don't know, but it's going to be ranging in that area because why? Because people are trying to position themselves ahead of earnings. But that's going to be true also for Apple, who's doing their report tomorrow. They're down $1.25. It's true for Meta, who's got their earnings later today. They're down $3.40. And we've got Microsoft also down 5.22 with earnings later today. NVIDIA is the one that's down the most, down $5, which is about 3%. That's what I was going to say. I'm sorry, that's not true. 3.88% at 123.99. It seems like a great place to buy. That's not investment advice. Okay, the Dow down 0.08%. NASDAQ, I'm sorry, up. What's wrong with your Randy? Anyway, Dow is up 0.10%. NASDAQ down 0.60%. S&P down 0.29%. Tesla down 1.6%. Magnificent Seven, mostly in the green. Magnificent Seven. The Cathie Wood stocks, mostly in the green this morning, a couple in the red, and nothing by big amounts. Okay, so how are bonds impacting all of this? Let's take a look at the bonds. Yeah, we've got the bonds down 2.1%, 2.1 basis points this morning at 4.528, only 28 basis points to go. And we could be under 4 only 2.8 more basis points, 2.8 more basis points to go, and we could be at 4.5. That would be lovely. We've got the, see, I hit it wrong. We have got, oh man, everything's messed up this morning. Never mind. I don't know what the 2-month is, etc. You might not even care. Oil down another 50 cents this morning at 73.29 because inventories are increasing, and we are now in February. Well, almost in February. So we're starting to look towards spring. Oil prices down in Texas Intermediate, down in Brent. And natural gas down another 1.67 to $3.41. We were over like $4.10 a week 10 days ago. That natural gas dropping like a rock. Again, we're getting 1st of February is just Saturday. Gold directionless, it says here. That's true, up $1.30, but $27.95. It is at its all-time high. Directionless at its all-time high. Silver up strongly this morning, 31.65, up 2.47%. Copper is up 0.74 at 4.278, a little bit under its recent range. Dollar steady, and Bitcoin, now that's directionless. It's only up 252 at 102 roughly. Okay, that's where everything is standing this morning as we go into this wild and crazy day. It is going to be wild and crazy, and I'll be reporting, of course, all day on X as all this information comes out today. But then we'll have how much, I've got the best analyst on my show. Jeff Lutz will be, I think, around 5-ish. We will be posting his. It might be 5:15, 5:30. We'll be posting his, and then at 7:45, we'll post Brian Wang, and both of them will give us a complete breakdown of the day. We will cover Microsoft. We will cover Meta. We will cover Tesla. We will cover the Fed. We'll cover all of those things in those two conversations, along with whatever news might have impacted any of that later in the day. So please hit like, subscribe, and notify. Please join Patreon. You can do it. Please do it. And then what am I forgetting? Oh, yeah. I'll put up the conversation I had last night with Nicholas Gibbs. I think you'll like that. I'll put up the Brian White one also. That was a very good conversation. So I'll put both of those cards up in case you've got a few minutes that you'd like to spend watching some more stuff. All right. That's all I got for you right now. It's been great talking to you.